I'm Shay Russell from mining.com.au, and joining me today is the Managing Director of Toubani Resources, Phil Russo. Phil, it's great to see you again. How are you?
Good morning, Shay. I'm going pretty well, thanks.
On October the 31st, you released your highly anticipated DFS for the Kobada mine in Mali. Tell me, what are some of the key highlights of this report?
The headline numbers are really attractive. 162,000 ounces a year across a 9-year initial life of mine for an all-in sustaining cost of essentially $1,000 an ounce US. That equates to a 1.56 million ounce reserve, and that reserve was done at 1650 gold price. So a very conservative number to today's level. The capital cost here is it's the industry leading in terms of capital intensity of US $216 million. So um, a moderate capex number for what the financial returns here are pretty significant. And we were talking IRRs here of nearly 60% and NPV to your capex here of basically over 3 to 1. So really attractive returns, really robust numbers that really set us up very excitingly here for the future.
Phil, I hope you don't mind, but I'd actually like to draw attention to one key part of the DFS that you've pointed out, and that is that you'll have a ridiculously low all-in sustaining cost of $1,000 per ounce, but you've based a lot of your financial assumptions on $2,200 per ounce for gold. This puts the company in rude good health. Tell me, how have you been able to achieve these low costs?
Yeah, it's the technical characteristics that drive our low costs. So we're using prevailing operating costs in the current environment in West Africa, but it's the technical attributes of Kobada. We essentially have one of the softest rock deposits in the sector. We talk about that in the presentation that was released yesterday, and those flow through in your capex, in your opex. You use less power. And they drive your free dig, so you know drill and blast. Those things translate into that $1,000 all in sustaining cost number. And so for us, we know that Africa has challenges, like everyone that's in the region understands that. But really compelling projects, they find a way to navigate around that, and that's what we have in Kobada and what we've delivered with this study.
Listen, Phil, all these times we've been speaking, you've been quite steadfast in the fact that you were saying you have come here to turn the Kobada deposit into a mine. Now, clearly, these are excellent numbers that you've been able to produce. What comes next for Toubani Resources?
Yeah, that's right. We said that this project has the capability to become a mine in relatively short order, and that the milestone to deliver that study was critical along that journey. So from here, we're not trying to build this tomorrow. For us, that was a base case project, a very compelling base case, but there's opportunities to enhance the project across capital and operating, as well as schedule, to optimize that capex number even further. And we'll do that. We've begun that today. In parallel, we're going to turn the drilling rigs back on. There's opportunities galore to grow the project, find more of this oxide ore. That's what separates our project from the other projects, is we have an abundance of this soft rock free dig oxide ore. We have a wealth of that here. That's why these returns are so attractive, is the simplicity of Kobada is very apparent. And so we're going to grow the project, we're going to enhance the project, we're going to de-risk the project. And that's all commencing now, and will continue into 2025 before we make any sort of final investment decision. So we're not a boring company. We're pretty exciting over the next 6 or so months here for investors.
Listen, Phil, it is great to see this progress for Kobada, and I look forward to the next steps over the coming months. Thank you so much for being here today.
Thanks a lot, Shay.